Do you remember, Sip? We used to look at this chart pretty often. This is the Bureau of Economic Analysis. This is all free data that you can find online where you compare incomes to savings and things like that. So, this is the income graph. This is showing the income every month since 2023 January. So you can see this is a good sign for what's happening is the incomes continue to grow. And then you of course, something that might be changing in the next couple of months or over the next year, 2025, 2026, is taxes. So you can see taxes are pretty consistent across the board here. And if we subtract taxes from income, you get what's called disposable income. So let's just look at disposable income. We'll get rid of taxes. So disposable income still on the rise. I mean, October, we had a huge jump in disposable income. But now let's look at expenses, right? This is outlays. So outlays have been on the rise too. This is the whole discussion around inflation, right? Basically, the Fed would like to see this kind of flatten out a little bit, not go up as aggressively as it is. Both the blue line, what people are getting paid, and the orange line, what people are paying for stuff. Now the question is what's the difference between these two? Because that's going to be a person's savings, right? That's going to be this number down here. So let's just look at savings. All right. So now when you just focus on savings, you'll see this interesting trend. Now, October, we had a pop up, but you'll see kind of why people, especially in this year, 2024, have been saying, hey, every month I'm not taking home as much, I'm not able to pocket as much money. And then in October, we got a pop up. But, the lead up in December is that, hey, things are more expensive in the store, way more expensive than the amount my paycheck has been growing. But there's also something else that we've been looking at here at Trading Trainer, and that is how much of this savings is being moved from passive accounts going into something like active trading accounts, right? How much is going from, just putting your money in a certificate of deposit or even something as aggressive as a mutual fund. These are like hands-off investments to going into things like crypto and stock trading and options trading. And the number is huge. And so there's a lot of folks, like I said, putting their money into the markets without and this is just now we're getting what AJ's thoughts are. This is money that I'm not sure folks are doing their risk analysis on, right? They're not thinking that the markets can lose. So this is kind of a very vulnerable place for folks